I think first and foremost, the crypto market boomed, as we saw. I mean, the price of Bitcoin just being one indication of that. And I think so many more people had time to research. So I think the biggest change I've experienced from my side is there's been an influx of new curious people coming into the space. I think that's the biggest change we've seen.
I think the pandemic just accelerated both the development and adoption of crypto. I think it's by definition, something that can be done remotely. It's decentralized. And so a lot of people locked up in their houses, both, I think there were a lot of developers who suddenly had a lot more time on their hands and naturally started to spend a lot of personal time experimenting and developing solutions within blockchain technologies. And then on the same side, a lot of consumers were at home, with extra time and started, either trading coins or experimenting with some of the products that were being built.
In terms of traditional financial services, such as traditional banks, we're seeing an uptick in interest in terms of rolling out blockchain and crypto asset support. I think there's still a question around whether or not enterprise blockchains, kind of how well they're doing compared to the public blockchains. But we are now starting to see big traditional players entering the public blockchain space, which is very exciting.
The best engineers that I've worked with are moving into crypto. So I think you're seeing absolutely a lot more of the top engineering talent move from traditional financial services to crypto.
I would not say that the big banks have missed the developments on the blockchain. They just didn't really prioritize over the last, 5 to a couple more years. However, right now they're catching up very quickly. And the big financial institutions, they're basically doing two things. First, they experiment with offerings in investments in cryptocurrency trading or in the build-up trading desks. That's for one. And second, and that's very important to observe, they try to make some lobby work. They're lobbying the regulators.
I think the regulatory part is very important, and probably with the advent of the digital currency, central bank digital currency, this is happening or will happen in the next 2 to 5 years. Obviously, this will take time. So yes, I definitely think that we have a better momentum around blockchain, DLC, and crypto will follow.
What has really changed maybe over the last few years is we looked at blockchain and some of these technologies very much from a technology perspective. Now we're looking at this from a business perspective. And in many cases, we actually find that the business problem at hand can best be addressed by using blockchain technology.
The complete disruption of the financial services sector from blockchain technology is inevitable. I just think that we need to be realistic about how long that's going to take.
So I think the first phase of crypto was much more Bitcoin, store of value, etc. I think decentralized finance represents the second phase where people are actually using smart contracts to start to build real solutions that replace some of the existing infrastructure of finance.
I think it's one of the most exciting bits of financial services we've seen for a very long time. We take decentralized assets and we add decentralized services to give us massively reduced risk across the entire financial services space in terms of operations and transparency. So we're seeing it going strength to strength.
New services, very interesting ones, high level of promises, with top risk in there, so be cautious.
We're moving toward a much more borderless world with respect to all things, and financial services will be one of those things.
If you look at cryptocurrencies, we are really celebrating right now that the total market capitalization of cryptocurrencies is flirting with the $3 trillion hurdle, right? So if you put this in relation, it's really, really, really a big difference for the established capital market. So it's definitely not mainstream yet. However, and that's important, it is catching up very, very quickly.
I still think we're not mainstream. I think we are still niche as a crypto industry, but I think we are starting to enter mainstream awareness if not mainstream adoption.
We're seeing a speed of adoption that might be similar to the internet. Perhaps it's actually going to be faster. In which case, I would expect in the next 2 to 5 years it moves from adoption to mainstream.
I won't say it's mainstream. I think is moving towards a more institutional part, something that was not the case a few years back. It was more difficult, but this move, I would say, in a few years' time, with I would say right framework of the regulatory, this could become a mainstream for sure.
If you believe in digital assets and blockchain, you have to have cash on ledger. Otherwise, you can't really provide for the user experience and resolve for DVP risks. Now, most of the big central banks, the Fed, the ECB, and also more recently, the Bank of England have said that the introduction of a CBDC is probably a few years away. So you have to look at this very much from the perspective, how could these payment instruments, how could they be deployed over the next few years? So this is not an immediate concern, that is a longer term strategic concern. But you have to get ready. Everyone has seen now the discussion, particularly in the US, about stablecoins, how they could be regulated. European regulators have proposed similar ideas under the MiCA regime. And so we need to really think about how we would incorporate a digital payment solution in the form of CBDC or stablecoin in future into our process.
Clearly, stable currencies are really, really important, and people have high demand for it. So it's an important tool, and they kind of play alongside fixed insurance currencies like Bitcoin and Ethereum. So really important. But some of the benefits of kind of decentralized currencies disappear, such as protection against issuer risk. So then there's going to be a battle of synthetics, i.e. kind of make it out like crypto asset backed versus the CBDC's issued tokens. So I don't think the future is clear right now. There is a need for a stable coin. Which one will win is still open to interpretation.
If central bank digital currency now is looking very closely to this technology, building a project around that, and hopefully issuing that in the future as an alternative to the cash, this will definitively bring the attention as well to the crypto. So I'm very positive actually in terms of the outlook and how these two, I would say these two different layers can converge one day.
NFTs, definitely it's been reaching the hype, and obviously there are many type of assets, products, services, anything that it can be tokenized in order to be like exported. So it is on top of the hype. So the point is, I'm quite sure that it's going to survive. The question it is how much of those type of new services, new products, new things that we are moving into the NFTs and we are like trading in there, they would survive.
I think NFTs are going to go strength to strength. It's just what we understand NFTs to be. And what value they represent is going to evolve considerably beyond images and into financial instruments.
NFTs are just a primitive for digital ownership, and that that digital ownership will impact every industry. I agree with Raoul Paul when he says that NFTs are bigger than DeFi, because DeFi disrupts one industry, banking, where NFTs disrupt every industry. So NFTs, you really have to think of them just as a primitive, which give digital ownership. And we're just now starting to see, the applications that'll be built on that. But, really your health pass that proves that you have a COVID vaccine, your driver's license, these are all pretty poor technology compared to, what we have with digital ownership on the blockchain. And I think that you can expect that pretty much anything where you're proving ownership of something will be an NFT in the future, and it'll disrupt absolutely every industry.
Yes, I don't think necessarily they need more powers, as in necessarily there needs to be a huge amount of regulation, but I think it feels like there's a lot of resistance to involving regulators in some conversations. So in terms of their power of knowledge, they need more power in that sense. They don't necessarily need more governance power.
I think regulators have a really good set of tools already, including regulations available to them. So I think most of the existing regulation can be adapted to can protect customers today. So I'm not entirely convinced extra powers are required and extra tools are required. The thing that I would actually encourage people to think about is fundamentally, blockchains are far more transparent than traditional financial services because of the open transaction nature of blockchain. So if anything, I think we should be looking to optimize how the surveillance and governance is performed by regulators because I think we can be far more efficient and produce lower cost of transaction in the crypto space versus traditional space.
If we don't have a clear regulatory on the crypto, these people are still navigating to find their way. Therefore, I think it's very important to empower let's say the established financial markets push this regulation so that we can have a, let's say, new ecosystem with different players and with a more affordable finance for everybody.
Regulators already have the power they need to keep people safe, consumers safe from crypto. Unfortunately, I'm not sure they're quite using those powers yet. And I think that's for two reasons. On the one hand, because crypto is so new, it's not even quite clear which regulatory body should be involved and how. So I think that is creating some slowness on the regulators' part to define, the rules of the road. And I think it's very difficult to quite fit crypto into the existing concepts of regulators have already used. So as a result, I think we're just seeing slowness. And I think, certainly at blockchain.com, I think most crypto firms actually want more regulation to create these, create clarity. I think that's one of the things that is perhaps slowing adoption across both retail and institutional users.
How to connect and how to support payments in order to make agile and flexibilized and even help to interconnect and interlink each of the different markets within the finance.
So I'm really excited about what blockchain can do for the private equity space. We've seen equity crowdfunding and various forms of retail investment opportunities pop up over the last few years. My particular knowledge is within equity crowdfunding, and I think security tokens and tokenization in general can make private markets much more akin to public and crypto markets, which is what's really exciting.
One of the things that I've been actually somewhat surprised by is the rapid adoption of crypto by institutions. And it's a little funny, I would be surprised by it because I joined blockchain.com to lead the institutional business. But even I don't think I expected how quickly large institutions, from banks to hedge funds to family offices to pensions and allocators, all of these firms are moving, I think, about as fast as they can to figure out how to start to trade or invest or own crypto.
I think that really you could write checks against self-custody, decentralization, and then because of those two, security for the next 5 to 10 years, and that money will probably come back to you.
For me, that is really the opportunity. How can we reconstruct and reorganize the exchange of value, for instance, in the form of peer-to-peer settlement? One of the areas we're really interested in, where you, for instance, allow institution asset managers to directly trade with each other without necessarily going through a broker or intermediary for that purpose. And I think these are some really interesting fundamental ideas that go way beyond just crypto investments.
What most excites me is what the blockchain can do for the private equity markets. I think it's so exciting to see normal people with foresight and understanding of business being able to invest in potentially the next Airbnb. And while that market is still developing, I think one thing that can really help it and reduce risk for retail investors is liquidity, which I think the blockchain and tokenization.
I think I'm most excited about what I call freedom to transact. We're seeing kind of ability for people to perform financial transactions at a fraction of the cost before. So it's kind of enabling huge swathe of people to benefit from tools that were only available to the super rich before. And that to me is super exciting.
I think finance generally is something that very few people fully understand because it's evolved over, 100, 200 years. Some of it is kind of somewhat antiquated and Byzantine. So there's a really interesting opportunity to kind of rebuild some of the core components of that system using technology. And I think that will lead to a lot more efficiency and ultimately, more value for customers and freedom for engineers to build innovative solutions.
All the new things on blockchain that are not the pure crypto itself, right? Stable coins, in example, or payments mechanisms in order to consolidate and connect, and being able to create, gateways to connect and interlock with some other industries within financial services, but also out of the financial services.
The real advantage and value of the DLT and blockchain is understood by regulated markets, and it is used.
Rethinking really, how have we architected the financial industry? And in certain aspects, are there better ways of doing business? And that is a question that hasn't really been asked for a long time, but blockchain really forces that question.
One of the core principles of crypto technology is this notion of decentralization. Meaning, I think what you saw with the internet was the rise of a handful of huge companies that captured most of the value being generated by the activity of individuals on the internet. And I think part of the promise of crypto is to enable those individuals to keep much more of the value that they are generating through their activities.
Fire was an exciting invention. And whether it's good or bad depends on exactly how you use it. And I think that we have, another incredible tool at our fingertips now, and we need to figure out how we're going to use it.